Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the cannabis sector. Yeah, so it's been beaten down and been a major pullback for the entire sector ever since they sold the news on legalization. It started the day before, and so now Canopy Growth here, ticker symbol CGC, is trying to set up for a bounce. Okay, so you have RSI at 39 now. You could see here this is a previous level that it bounced off of back here in back in August. Okay, when it pulled back, it hit this level and bounced. And then if you look down here at Fasto, you can see Fasto is below 20, and it had a crossover today. You can see the black line crossed over the red line. So that's a signal the chart's starting to heat up. It needs to break back above 20. A break above 20 would be a good sign that they're trying to continue the bounce that started intraday. Canopy Growth did close red today, but it had a very nice intraday bounce. As you can see here, the open today was down here off of the yellow line, the gold line, which is the 100-day simple moving average, currently at 37.70. It bounced right off of that level, and then the candle worked its way right back up into the Bollinger Bands. You can see the purple line there's the lower Bollinger Band. It hit that level and pulled back. This is a hollow red candle. That signals that, or is showing that even though Canopy Growth was down on the day, it did close below above the open. The open was down here around 37, and it closed up here at 41. That's a signal that even though the bears have been driving it lower, actually the bulls were in control today. Okay, so the big level to hold is going to be this 100-day simple moving average. It needs to stay above that level. If that level was to break and it dropped below, you could see this gap down here in August. You could see this gap possibly fill. A drop down to 34 would fill that gap. Downward gap fills many times are a catalyst for a technical bounce, so keep that in mind. Right now the candles are working their way back into the bands. The big resistance levels to break are going to be the closing price here on the 22nd. Needs to get above that level, and then it's all about EMA4 here. EMA4 at 44. That is lined up with the close from back here in September, the low close, and so that's going to be a big resistance level to break. Fail to break EMA4, and that's going to signal the bears are still in control and more downside risk. Okay, once EMA4 turns back into support, that's when it could head higher and possibly test that 50-day simple moving average. Okay, let's look at CGC here on the 15-minute chart, and you can see it's been in this downtrending channel. Well, it's breaking above the green line. That's the 50 simple moving average, currently at 40.79. That's going to be the big level, along with the middle Bollinger Band here at 40.35, the dotted purple line. If it can stay above this green line and this dotted purple line tomorrow, that should signal that it wants to head higher. Now it needs to break above this descending resistance line here. If it can break above this 4150 level, okay, break above 4150, break above 4150 and 42, that should be a good signal that CGC wants to head higher. So keep an eye on 42. We'll just call it 42. That would be a clear signal. If it's trading above 42 tomorrow, that should be the signal that the bulls are continuing with the bounce that started today, that it wasn't just a head fake or a false alarm, that they really are trying to push it higher. And then what you're looking for is a run up here to the 100 simple moving average at 44.76. That's going to be the next key resistance level to break after 42. If you look here at the open, check out the huge volume bar. So it does look like there was some loading down here off of low of day levels. Now take a look at Cronus Group, ticker symbol CRON. Now it's down here, it's hitting 38 on RSI. You have Fasto that's below 20. The big thing here on this chart is it came down and it hit the 200-day simple moving average, the red line right here at 789. It hit that level and bounced. Okay, the open was down here, okay, just above 750, and the close was up here at 834. So once again, even though Cronus Group closed down on the day, it did close above the open. After a multi-day pullback, that's a signal that it's setting up potentially for a bounce. Right now, it's hitting the next key resistance level. That's the gold line here, the 100-day simple moving average at 847. Failed to break that level, and then it's going to come back down and test this 200-day simple moving average. Now, if it could break above the 847 level, break above the 100-day simple moving average, then EMA 4 is going to be the next target at 910. Okay, candles have been riding below that level. As you can see over here, when the candles are below the pink line, it signals downside risk. Once it gets back above that level, when you see it close above that level, that should be our clue. Okay, they changed the algorithm, the computer program, the trades has been changed to a buy program, and now they're no longer selling, and they're looking to at least get a more sustained bounce going. A new uptrend cannot begin for any of these stocks until the middle Bollinger Band, that's the dotted purple line on this chart, the 20-day simple moving average turns back into support. Bounces right now are just short cover rallies, okay? And so once a key resistance level is hit, if it fails to break that level, you have to look to lock in gains, especially if there closes below EMA 4. Closing below EMA 4 signals it's a risk to hold long overnight. So just keep that in mind. You're taking on risk when you're staying long and candles are forming below EMA 4 on the daily chart. Now, one time that you would hold when candles are forming below EMA 4 is in this exact setup. When you're loading off a support, we had alerts out at the open today in the chat, and everybody, the alerts were put out that it was hitting the key moving averages for multiple cannabis stocks across the sector, and so that was the load level. And so if you're loading off of the low, the key moving average, the support level, then you're playing the support level. In this case for Cronus Group, it's the 200-day simple moving average back to EMA 4. Okay, that's the playing field here, and so the 200-day simple moving average is your stop loss level. If it were to drop below that level, that would signal downside risk. The downside risk is it comes all the way down here to the 300-day simple moving average at 629 to test support. As you can see right here, it's also holding this June, the June high close resistance level. Okay, that's lined up perfectly with the 200-day simple moving average. What was once resistance, you can see how this zone was big resistance in this channel. Okay, once it broke above this channel, that's when it headed higher. And so now it retraced back down to the breakout level, and it's trying to hold that. So it's all about this 200-day simple moving average. This is where it technically should get a bounce going. Now, if you look here on the 15-minute chart, you can see it pulled back, and then right now it's working on the green line. That's the 50 simple moving average, and the dotted purple line, the middle Bollinger Band, the 20 simple moving average. Notice how they're both converged right now. What needs to happen is it needs to break above 850. If you see it trading above 850 and then above 860 tomorrow, that should be a clue. Okay, yeah, that they're looking to push it higher, and then it has to get above the high close from today at 1 o'clock, and so that's right around 870, 875. And so trading above those levels, that should be your clue. Okay, they're pushing it higher, and then what you're looking for is a break above 9. 9's going to be a resistance zone, and then it's all about 950. The 100 simple moving average would be the next target. So keep an eye. It's set up here with this symmetrical triangle. You have this downtrending channel. It's at a flex point here. Now to the downside, if it were to drop back below 830, that's going to signal downside risk. It could come back down here to 780. It did close today below the middle Bollinger Band and the 50 simple moving average. It has to get back above those levels to be set up for this technical bounce play. Okay, if you look at TLRY here, you could see it was trying to hold support as well today. It was down 1.4%, but it also formed the hollow red candle. It closed above the open. Okay, they dropped it and bounced it. It almost formed the bullish median lines there. Yeah, not quite. Yes, but the bottom line is it held the green line. It held the 50-day simple moving average. It came down here and opened right at that level just below at 105.56, bounced off of it and headed higher into the close. Closed just below the high of day. Now the big level to break is going to be EMA 4 at 131.48. If that level remains resistance, it's going to signal downside risk. The bottom line is for most of these setups, it's going to be either it's going to break above the EMA 4, and that's going to signal that it wants to head higher. The bulls are taking over again, or if it drops below the key support level that it just bounced off of, which is the 50-day simple moving average for Tilray, that's going to signal downside risk. The next support is the $100 level, which was the closing price here on the 24th. If this 100 to 105 level failed to hold, that would be a major red flag for Tilray, and it could start a more prolonged downtrend. So it's really important that it bounces off this level. Notice how this is also the bottom of this more sideways channel, and so it's going to be all about bouncing off of it, and then if it does, it could retrace possibly back up to that middle Bollinger Band at 142. It has to get above that level to get a new uptrend going. Okay, if you look at Tilray here on the 15-minute chart, all these stocks have very, very similar patterns in the cannabis sector, and you can see it got above the middle Bollinger Band today, had a nice bounce. Look at the huge load off of low of day. They all had the big volume spikes at the bottom with the hollow red candle, and then the share price is traded above that level. So that's our clue that big money loaded at the bottom, and they big money sells at the top, they load at the bottom. So right now, people have loaded heavy for this bounce. So we're going to see if it can get a multi-day run going. It has to get above this 121 level. Okay, the 50 simple moving average is currently at 120.46, and then you have this descending resistance line. Okay, and it's lined up right with these candles here. And so really, once it gets above this, 123 level, the high close from today, that should really be the signal that okay, it wants to push higher. It's set up right now. If it does, it could possibly run back up here to that 100 simple moving average at 134.89. Now to the downside, if you see it trading below 117, that's going to be your clue. Okay, yeah, it's not setting up. Yesterday it was just a head fake. There's more downside risk. It has to hold 117. Right now, that's the stop loss level. Okay, let's take a look at ALEAF. Okay, so yeah, this is another big pullback. This is a over-the-counter cannabis sector stock that you should definitely keep an eye on. It's one of the major players, and yeah, it's still just a penny stock. So for the small cap traders, this is a nice one. It pulled back for 6 days in a row. So 5 days down and rebound is a good technical bounce setup, and so 6 days down, that's a good strategy for a technical bounce. It bounced right off of the 50-day simple moving average at 156. Keep in mind, whenever you get a retrace for a stock that's in an uptrend and it pulls back to the 50 simple moving average, if that level holds, that's the reload level. Many times stocks will bounce off of that level. Now it has to get back above 201. That's EMA 4 there. If it's trading above 201, that's going to be your signal that there's a continued bounce. Today's candle formed below the lower Bollinger Band, so the candles are likely to work their way back into the bands, but it's going to have to turn that EMA 4, that $2 level, into support. If it dropped below 150, if it dropped below this green line at 156, that would be a major red flag. It could come all the way down to $1 and test that 100-day simple moving average. Pretty much the charts will be broken if the 50, if this 50-day simple moving average fails to hold. You have charts that have already broken down here for CGC. Cronus Group is already down to the 200-day simple moving average. It's going to be really important, for Tilray, for Canopy Growth to hold that 100-day simple moving average, for these stocks to stay above this 50-day simple moving average. Bullish stocks form candles above the 50-day simple moving average on the daily chart, and when that turns into resistance, it's just a sign that the bears have now taken control. So it's going to be real crucial that Tilray stays above this level, and the same thing with ALEAF. AF. It has to stay above that 50-day simple moving average. And looking at the 15-minute chart, you can see here it just has to get above that 50 simple moving average at 179. If it can get above that level, then you have a potential run up here to the 190, 195 level, which was the high close from today, right around 192. You have a descending resistance line lined up with 195. Pretty much 180 and 195 are two big levels. Trading above both those levels, that should be your sign, ALEAF. It does want to head higher. It's in the middle of this downtrending channel right now, and if it were to drop below 168, that middle Bollinger Band, that would be a sell signal. It would signal downside risk, and it could come down here and retest that 140 support zone. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.